We said at the beginning of 2024, it was going to be a harder, more difficult year to invest in many chip stocks. And that's really playing out, especially this first half of the year.
Welcome back to Chip Stock Investor. We hope you had a great weekend and a good beginning to the week. We took a couple days off and we're going to get right back into it with AMD's most recent quarter's earning report. We'll show you AMD's stock year to date up about 14%, but it had a significant run up in the last 3 months. And so, as far as we're concerned, the last 3 months of the stock surge and that subsequent so-called crash never even happened. We'll talk about why we feel that way in this video.
Also, Casey, the big question that we've been getting, especially in the last month, and we're probably really going to start hearing it now in the aftermarkets sell-off. You can see the stock back down to 147 bucks per share, almost back to where it started 2024. Is AMD stock now a buy the dip candidate? And 3 months ago, if you missed it, we talked about why AMD stock, in our opinion, was a hold at best. We own AMD stock. We still own AMD stock. We're planning on continuing to hold it. But we explained why AI hype was getting very dangerous for investors piling in to this stock. This last earnings report really just emphasizes that. So we're going to do a recap of the video 3 months ago and just refresh the numbers because the story really still has not changed. AMD is not NVIDIA. AMD is not simply going to just catch up to NVIDIA. And so if you're invested in AMD or interested in investing in AMD, you need to get a clear picture of what the actual bullish thesis is for AMD. And it's not they're going to catch up to NVIDIA.
AMD is now a more diversified business thanks to that Xilinx acquisition that we've talked about in the past. And when you're looking at a secular growth trend like accelerated computing infrastructure in data centers, diversification can become diversification. And we'll explain that a little bit further. That's when you're so diversified that it actually dilutes your highest growth opportunities.
And you can see that in this chart from our friends over at Main Street Data. You can score yourself a discount on a Main Street Data subscription in the link below in the video description. But you can see the embedded segment. That's the light blue bar at the very top. That's essentially Xilinx that was acquired in 2022. You can see it shrinking through 2023. That trend is actually getting worse. The gaming segment, that's the dark blue bar on the bottom, also shrinking. And so when AMD is talking about all this AI growth, all it's really doing at this point is replacing the shrinking growth from embedded and gaming. This is diversification.
Take a look at the Q4 23 revenue breakdown that AMD provided. You can see that the data center revenue clocked in at 2.3 billion, and that was 38% year-over-year growth at that time. Now let's take a look at what the most recent quarter was. Q1 2024 revenue, not any different, 2.3 billion in data center revenue, up 80% year-over-year. Of course, that 80% year-over-year growth is AMD lapping the absolute worst of the downturn for this part of the market. We'll show you one more time this chart from Main Street Data. You can see in Q1 and Q2 of 2023, that was the trough for AMD, and it's been on an upward trend since.
Yeah, that's right, Casey. Similar story for the client segment. That's the PC and laptop chips. In Q4 2023, 1.5 billion, big rebound from the year prior. And in Q1, a little bit of seasonal decline down to 1.4 billion, but you still see the big 85% year-over-year increase. Again, much of this simply due to AMD lapping the worst of the downturn in the first half of 2023. But here's the problem, folks. As we explained 3 months ago, the gaming and embedded revenue segments are getting worse. This is Q4 2023. Gaming down 17%. We're now lapping peak PlayStation 5 and Xbox sales. Embedded, that's the Xilinx business. heavily stilted towards industrial customers like automotive, factory automation, and such. We've also talked about how those FPGAs from Xilinx help companies like Synopsys and Cadence, the chip design software companies that also have some hardware business as well. We said that these were going to continue to get worse. And here you go, Q1 2024. You can see those segments, yes, indeed, continuing to shrink by an even larger amount. Gaming down 48% from a year ago, embedded down 46%. So at the end of the day, what we have is an offset. Data center and client rebounds getting offset by gaming and embedded, just 2% revenue growth. Again, folks, this is diversification. Now, maybe just a slight detour here before we go into the real reason you might want to be invested in AMD. Let's do a quick detour here and at least compare AMD briefly to Intel, because the one upshot to the revenue story is AMD does continue to gobble up market share from Intel in these very important data center and client PC revenue segments.
Yes, they absolutely do. Intel's fourth quarter that we covered a few months ago, the AI or the data center revenue down 10% year over year in Q4 2023. AMD was up 38% year over year. Here is the most recent quarter's earnings report from Intel. Client computing up 31% year over year, data center AI up 5% year over year. Nick, tell us how we can see how AMD is still continuing to take a market share from Intel.
Yeah, pretty simple, right? Data center for AMD up 80% in the last quarter. Client PC and laptop revenue up 85%. So again, comping that to Intel, up 31% and 5%. Intel rebounding at a slower pace than AMD, which implies AMD continuing to eat up more market share of Intel's two biggest and most important segments, or at least historically what were its two biggest and most important segments. The company, obviously, as we discussed just a couple weeks ago, Intel Foundry, sort of the main focus these days. But that's a topic for another time. Let's talk about why this has been the story surrounding AMD. AI, the AI magic wand getting waved around very vigorously, more than ever. AI. This is all fine and well, but AMD is very obviously not NVIDIA. It is not scaling at all, even remotely close to what NVIDIA is doing. And because of its highly diversified business, it's not going to. NVIDIA is the pioneer of this market. So what do we need to focus on as AMD shareholders?
Okay, we're going to go back to the Q4 2023 earnings call. CFO Gene Hu said that they expected to expand gross margin in 2024 while driving operating model leverage and delivering earnings per share growth faster than the top line revenue growth. And that is where we need to focus our attention, that expanded gross profit margins and earnings per share growth.
That's right. And the Xilinx acquisition back in 2022 was solid. It actually helped AMD get to record gross and operating profit margin on a GAAP basis. This is another chart that we mocked up from Main Street Data last quarter and said, all the AI hype is fine and well, but this is what we actually need to look for in AMD as they scale up that AI business and look to offset some of the weakness from the gaming and embedded segment. Through the next couple of years, we really need to see mid to high 50% GAAP gross profit margin and high 20% to mid 30% free cash flow and operating margins to justify today's share price. So how did AMD fare in this regard?
Gross margin in the most recent quarter, 47%, which is up 3 points year over year. And then on a non-GAAP basis, 52%, so up 2 points year over year, making some progress. And then on a GAAP basis, operating margin 1% versus negative 3% this time last year. And then on a non-GAAP basis, AMD's operating margin still at 21%, same as last year. So they've made some progress on those profit margins. What was AMD's financial outlook for the next quarter?
Yeah, we said at the beginning of 2024, it was going to be a harder, more difficult year to invest in many chip stocks. And that's really playing out, especially this first half of the year, because the guidance was fairly lackluster. But again, the upshot here, the AI revenue still only just merely offsetting weakness elsewhere in the AMD product portfolio. You can see the implied revenue guidance, just 6% growth year over year. But remember, we highlighted the CFO commentary about the real story to focus on being earnings per share growing at a faster rate than revenue. That is most certainly in play here. This guidance for Q2 2024 implies, on a non-GAAP basis, adjusted earnings per share up 12% year over year. So not bad. We are starting to see the profit margins recover back to the point where we need them to be within the next year and a half to 2 years to justify, again, today's stock price progress. But certainly no reason to bet the farm on AMD stock at this point. Certainly not because of all the AI hype.
Let's go over the valuation that we had put in place in February of this year. It was 65 times adjusted trailing 12 months earnings per share and 230 times trailing 12-month free cash flow. And I remember we said that these metrics were basically meaningless. So let's talk about the updated valuation after these earnings.
Yeah, meaningless because on a trailing 12-month basis in 2023, AMD's business was not profitable, or for the most part, not profitable. That's why those metrics were so ludicrous looking. And a little bit of improvement, now trading at 52 times adjusted earnings per share and 203 times trailing 12-month free cash flow. We're still going to see a sizable rebound in free cash flow in 2024. That's still on the table, but that's the reason why the metric looks a bit out of whack. And without some more specific full year guidance on AMD, this is still why we call this a hold, because as they scale up the AI business to replace the losses in embedded and gaming, we don't know what their profit margins are going to be as we exit 2024 and enter 2025. We can talk about AI as much as we want, and products like the Instinct MI300X, even the EPYC processors replacing a lot of Intel CPUs in data centers. That's fine and well. But remember, folks, these new products just offsetting weakness elsewhere. What we really need to see is AMD generate much more robust profitability just merely to justify the current stock price. So until we see more robust revenue growth that trickles down to even higher earnings per share and free cash flow growth, the stock is merely a hold in our book. We need to see that happen. Now, it sounds like AMD is ramping up production of those MI300X accelerators, tapping obviously Taiwan semiconductor manufacturing for those accelerated compute systems. Maybe the second half of 2024, AMD will begin to report stronger overall growth and, more importantly, stronger earnings and free cash flow growth. But at this point, we have limited visibility into that. And so we own AMD stock and we're content to merely just hold what we have. This is not a buy in our book.
Yes, we'll have to see what the coming quarters have in store. We'll make sure we keep everybody updated. Stay tuned. We still have Lattice Semiconductor and On Semi videos coming out later this week. So make sure, if you have not subscribed to the channel, make sure you do so. And just a quick reminder that we do have our show notes available for this video and pretty much every other video available on our Ko-fi shop or over on Discord if you are a member. If you're not a member, you can join here on YouTube or over on Ko-fi. Doesn't matter which, gets you the same perks. We'll see all of you again real soon later this week. Take care, everybody.